Bro, you're seeing it happen right before your eyes. Literally, and this is only Asia. Imagine when this stuff is happening during London and the US session. My goodness. This is the right way to trade. Let's get it. What's going on, guys? It's Joe here, and it's time to trade and get paid. I got a strategy for you today that I actually use. This is the strategy that I personally use to make my money week in and week out in this market. Let me show you how to use a simple chart phases strategy with price action, market structure. This is how we do it, and this is how I make my money in the Forex market. Let's get to it. All right, guys, so I'm looking at the GBP USD 1 hour chart, and I'm just showing you what's already happening here on the chart. You can see right down at the bottom that we have our little news things, our little economic event alerts. Those are very important to take a look at. I mean, when you see the dollars creeping higher, US dollars gaining, like, we should be understanding that that's going on, okay? Here's the thing though, we have to take a look at supply, demand. We need to understand where price is moving and why price is moving. It's not enough to just say, here's a support, here's a resistance. This is, you know, when it gets here, then sell. When it gets here, then buy. You know, that sounds great, except the problem is we all know that the market moves dirty. The market doesn't move clean up and down and just kiss every little zone perfectly. I wish it did. I really do. Because if the market hit like zones, just kissed them so perfectly, this would be so easy and we'd all just be millionaires and billionaires and we'd probably be owning the central banks. I don't know. But the market moves dirty. The market does not just cleanly move up and down. And so because that happens, we need to find areas on the market where we see the banks do business. So let's turn our attention to the charts and let me show you how that happens. So here we have a big push up. Let me just tell you that there are certain chart phases. You have uptrends, downtrends, ranges, consolidations. You have accumulation, distribution, reaccumulation, redistribution. You have these things that happen in the market, and all of them are very important and all of them tell a story, okay? So the first thing we need to understand is that we have an uptrend, all right? We have an uptrend. We see a low, a high, a higher low, a higher high. But here's the difference is that when we get back into the area back from here, see we had a big downtrend with a base before another big drop. When we get to that same area, I want you to notice what happens. We see the market just booming up. And then it comes to a screeching halt with a little pin bar right here. And then we have this big close below candle, this big engulfing candle. And what that tells you is that when you have a big push in one direction with a screeching halt and then a push in the other direction, that's telling you that there is supply and demand in the market. And so in this case, we have a supply zone there. How do we do that? We simply take our lines. We can go from the top line right here and then the bottom of that screeching halt candle. We're looking for the rejection candle. So you see that pin bar right there. Let me make it a little bit more open for you just so you can see it. You see right here we have a line at the top and we have a line at the bottom of that pin bar, okay? So when we see that, all we typically need to do is wait for price to come back into that area, and once it leaves that area, we can trade. Now you can see right here, I'm just showing you a live chart. This is not in replay mode. This is a live chart. Price pushed down, it came back up, and then once it left, it dropped. Very nice, just like we thought it would. Now, notice I'm looking at the 1 hour chart, and I wouldn't trade this on the 1 hour chart. here's the best way to do it. You need to do your top-down analysis from your 4-hour, 1-hour, 30-minute, 15-minute. You know how, if you're a scalper or a day trader, you should do that. If you're a swing trader, you should start on the weekly, daily, 4-hour, 1-hour. You know, so you really need to understand what type of a trader you are. So for this particular trade setup, I'm more talking about day trading or scalping. And you can still do this with swing trading as well. But I'm just saying this particular setup is more for the smaller time frame. So I'm on the 1-hour chart and I see that demand or that supply setup right here, okay? It pushes down, but I want you to notice how it pushes down. Notice that it doesn't just push down and then push back up. It pushes down and then gives you a base right here. You have what we call a drop, base, drop. That right there is showing you that there is more supply being gathered in the market. So you have a supply, you have pushed down, there's supply and demand here, and then there's a demand zone here. So in other words, when I say supply and demand, what I'm saying is banks are doing business in these areas. So we have a supply set here. We have some business being done by the banks right here, and we have a demand set here. So now notice that on the way back up, price doesn't even regard this area. It just blows right through it with this big candle, okay? And when it does, it pushes up, it tests our supply and then tests our area here, showing that both areas are valid. And then it comes in and actually, you know, closes inside of our supply zone. So what we really are looking to do is we set our supply, we push our way down and see where the banks do business. Once we see where the banks are doing that business, we can set that zone right there. And, you know, that's a really nice little setup right there. It's a really nice little zone right there, a little line. We can come down to the bottom of that if you really want to. You can come down and see like the bottom of it, and everything's really good. Everybody's happy, okay? And so you have a supply set here. It pushes down. Banks do business. We set a demand. Price blows through, tests our supply, tests our structure, and then closes inside our supply zone. Now the banks are negotiating. We're seeing how many orders are needed and how much of the supply is going to be sold. That's what's happening when you see this happen right here. This is no volume, all volatility. There's nothing really happening here. It's just the banks are doing business and determining how much of that supply is going to be sold. Okay, how much is going to be dumped off. Now, instantly, we see this big bearish breakout. That right there, once we saw that bearish breakout, we knew that the supply dump is now going to start. Okay, now, do we trade this on the 1-hour chart? No. What we really want to do is we want to come down to the 30 or really even the 15-minute chart. Okay, now it's up to you whether you like a breakout entry on a 30 or a retest entry on a 15. Okay, so if you take a breakout entry on a 30, you're waiting for the first volume breakout right there, and that's where you would get in the market. You would simply see the breakout. You see that we had the demand or the supply set. We see it come back in. Boom, it breaks out. You enter on the breakout. You take your structure. Boom, very easy setup. Very easy setup. Look at that. Guys, this is like too easy. You literally just wait for the breakout on the 30-minute chart. Wait for the volume breakout. Wait for the prices back into your supply zone. Wait for it to come out, enter the market. Use a nice, good risk to reward stop. Take it from here to here, and that's an easy 20 pip scalp. Easy 20 pip scalp. Very, very easy 20 pips. And guys, 20 pips a day is enough to make a lifetime wage from. You can get rich trading just 20 pips a day. Now you can take the retest entry as well, or the breakout entry. It's really up to you. It's what you like and what you are vibing with better. Like, what makes sense to you is, are you a breakout trader? Because why is that important? Some people say it doesn't matter. When you become an advanced trader, it probably doesn't matter. But when you're a beginner, you really need to consider breakouts and retests. And let me tell you why. Before I tell you why, let's take a look at this real quick. All right, guys, real quick, before we get into that next step, I want to show you something, because I have so many of you guys messaging me and asking me questions, and I'm helping as many people as I can. But what I did, because you guys have so many questions, is I set up a whole mentorship platform. We have beginner, intermediate, advanced. We have trade setups. Every time I take a trade, I send that trade out to everybody who's on our platform. Our trades are winning over 90% this year. Over 90%. We have won over 90% of our trades for the year. In addition to that, we have a community where all of the traders get to talk with each other and share each other's trades. It's amazing. We have our resource library where you can download, have downloadable resources. We have trading courses where you can watch videos that are private, not on YouTube. Things that are private videos you can watch that are going to help you go from beginner, intermediate, advanced, and even into mastery courses. I'm teaching everything from beginner all the way to market geometry and advanced chart phases, everything you can think of. We have so many students that are winning, and I want you to be one of them, all right? So if you're ready to fast track your success, I want you to go to TradeAndGetPaid.com. The link is in the description, and you can become a student today and win just like everybody else. So now let's get back to the strategy. All right, so now check this out. Why is it important to understand the difference between breakout and retest? Because some people, their mentality, their mindset is, once I see the volume, I need to get in it. And if I'm waiting on the retest, where exactly is the retest? You know, and now we're kind of like, is there volume again? And we start to question. So if you have that kind of question, you might need to be a breakout trader so you can just take quick entries and just ride the volume. But some people, maybe you're a little too quick. Maybe your mindset says that, you know, I'm a little bit more careful. I like to try to make sure that we have a breakout rather than not a fake out. And so if that's you, you might want to wait for it to retest and show rejection of that bottom entry. And so the retest entry would be better for you. So I'm encouraging you to test your mindset to see whether you're a breakout or a retest trader. When you become advanced and when you get to a place where you can control your mindset and your discipline, now you can do both. You can catch the retest or the breakout because you've mastered your mindset. All right, let's get back to the charts. So you see here, guys, that we had a really nice little entry here. We have a 1 to 2.1 risk to reward. Everything is beautiful in our favor. And just right here on the 30-minute chart, in 1 hour, we're down, and boom, we caught a quick 20 pips, really nice, everyone's happy, okay? Now what happens if we were on the 15-minute chart? We see the breakout happens right here, but the retest happens right here. So really the same thing. You see that the retest happens here, you see a breakout. Let me make it a little bit bigger for you. I just want to make sure you're able to see it. You can see that the breakout happens here. It comes and it pulls back and you get the retest here. That's your entry right there. So you get about you lose about a pip by doing the retest entry, and you can come back here, and now because you're doing a retest and not a breakout, you can tighten your stop a little bit. So why? Because now you have an extra candle. If it goes beyond that candle, you're really thinking it's going the other way anyway. So now you can really tighten that stop if you're a retest trader instead of a breakout trader, and you have a really tight stop and you still have your same target, and boom, look at how beautiful that is. Your risk reward is a little bit better if you're a retest trader, but you got a little bit later of an entry. Either way, it balances out and you still end up winning 20 pips and beautiful risk to reward. Look at that. Look how nice that is. So guys, here looking at it out on the 1 hour chart, again, just looking at back where it was, we see the supply zone set right here. It pushes down. We have our push, big push up. Here's our distribution, and here's where the distribution happens. We hit our entry on the lower time frame, 30-minute or 15-minute, depending on what you're doing, and you have a beautiful risk to reward. Now, pro tip, let's take second step, bonus footage. if price comes down into this area here and breaks down to the downside, then we know we can get down to here, okay? So essentially what you're saying is, do I want to let my runner run, right? If price breaks through here breaks out of the downside, then you can take and let the runner run all the way to the bottom. However, if price ends up rejecting here and coming back up, now you can look for another entry on a buy from here to the top side. You can come, because what's happening is you have a supply set, you have distribution, but then here you have buyers coming in, which means that they need to accumulate more. There needs to be more supply that can be distributed. So here's an accumulation, it pushes back up, and if we do get that push back up, you can take the buy up here, or you can really be patient and wait for price and do this same exact process over again right when it gets to the top. The difference is the bonus footage here, and we need to understand this. The more times a supply zone has been eaten from, the less supply is available. If I have 10 houses for sale and I sell 3, and then I go out, I sell them, then I come back and I sell 3 more, well, guess what? I only have 4 more houses left. There comes a point in time where I could have more buyers now than the amount of houses I have to sell. So it's the same thing here. The more we eat into the supply, the more supply is dumped off, the less supply is available. And the more buyers come into the market, now suddenly sentiment switches and there's more buyers than sellers, and price will drop. So be careful, because at some point you're gonna have a big push to the upside and price will poke out, get you a fake out, and then drop completely off, because buyers are going to come into the market at a low price before a big push up. So what you want to understand is that supply and demand cannot last forever. You really like fresh supply and demand zones. The first, you see it created here, and then you see it distributed here. This is the best one. If it does it again, that's good. If it does it again, you're starting to get on ice, dicey ground. And the more and more times that supply is eaten into, you need to stay away and be careful and make sure you have plenty of volume, because you don't want to get caught in a trade that's really not going to go in the right direction. Fresh zones are the best zones. Fresh zones are the best zones, okay? All right, guys, there you have it. I hope this video brought you a lot of value. This is how I trade. All I really do at this point in my trading career is I trade supply and demand. I look and see where momentum is happening. I personally look and I see where price is being manipulated. I watch the banks make their decisions and I ride the wave of their momentum. I don't need to try to force myself into something that's not there. I'm going to let the market make its decision. Let the banks do what the banks do, and I'm just gonna ride the wave of the banks. That's what the best traders in the world do. We realize I cannot manipulate the market. Only thing I can do is I can let my money ride the wave of big money. Let the big money move and let my small money gain with the momentum of the big money. Okay, I hope that makes sense. If it did, and this video brought you a lot of value, go ahead and hit that like button, smash that like button, subscribe to the channel, because you can see I'm dropping content that's bringing lots of education over entertainment. I'm not here to entertain you. I'm just here to show you what the market is doing so you can become the best trader you can be. I want you to be a professional trader so that you can take care of your family and chase your why, okay? You watched it happen live on the charts. You watched it happen before your eyes, and this is how we trade. If you're ready to become a student, go to TradeAndGetPaid.com and get all of the full courses that I teach, my personal trade setups, our community, our downloadable resources, live classes. It is amazing. You ain't getting anywhere else where you're getting this much value for this low price. Go to TradeAndGetPaid.com, become a student, links in the description. I will see you guys in the next video.